none of this, marry the house, date the rate stuff. No betting on appreciation. No betting on this. We only do great deals that cash flow today. 30-year debt. If rates get better in a couple of years, great. Go refi and make more money. But don't do bad deals because you think there's some human's going to come in and make rates go lower. That's unrealistic. Alrighty, folks, he is back. He has been MIA from the channel for a little bit, Mr. Jonathan from Convoy Home Loans, but he's been gone for a great reason. The young man just got married. So let's send him some love and congratulations, Jonathan. Congrats, brother.
Thank you. And I really wanted to say thank you to the community because a lot of people reached out during the whole evacuation and marriage time. I'm still catching up to everything in terms of responding because my calendar's been so packed, but I will respond. Thank you so much for everyone that, wished me good fortune and good luck. And obviously we'll just keep Dustin's family in our prayers and keep, pushing everyone else on that encouraging everybody that's still struggling.
Yeah, I couldn't imagine. You got the evacuation orders, the 3 or 4 days before your wedding. You probably had to do some scrambling. Then you get married. Then you go on a honeymoon. Then you come back, and Dustin did a great job holding down the fort. He obviously is going through it with his family, thoughts and prayers and all of that. But let's get into it. Let's talk Trump. He was inaugurated this week. I don't think it's unreasonable to think Trump, the real estate guy, wants lower rates. I think that is fair to say, but I'm not sure the market's going to agree. So, what do you think? Trump's in office 3-4 days now. He's done some executive orders, declared an emergency on energy, right? So, one of the ways to get lower rates maybe is to reduce inflation by lowering oil costs. Lots of cross currents going on. What do you think? Trump want lower rates?
I mean, he said this morning, he was like, I'm gonna try to push for lower rates, and everyone should follow America, and pushing for lower rates. And I think his response was, the supply of everything will increase, which means it'll drive down the inflation. So we're gonna be okay with lower rates. The market obviously is not reacting as like, okay, oh my gosh, we trust that Trump will lower the rates because I think that's the hope that a lot of people had with him coming into office, like we've talked about before. And I've sent you examples of literal clients just texting me saying, "I'm gonna wait till the inauguration because Trump's gonna do something."
Yeah,
He's not like our Lord and Savior, right? Obviously, at the end of the day, right? He is doing a lot of actions right now, but as we all know, there's a due process to everything, and it's not just one man that has power over everything. We have 3 different branches for a reason. So the market obviously is not reacting, and rates are actually higher today than they were yesterday. And I think that even with the comments that he's making and the push that he's trying to do, for as long as Jerome Powell is in the office, I think he's going to pretty much remain a strong stance. And I think your thought process might still be the same as ours. I think it still might be higher for longer and, potentially climb even higher than where we are right now, to at least touch, maybe July highs of last year or whatnot, to kind of just set the expectation that clients should essentially be moving with the market right now. And I think a lot of people have just given up on the fact that they don't believe that rates are going to be lower. But I think that still, like, rates aren't bad right now, right? They're still, I would say, better than they were, 2023 in October when we were talking about 8%.
Remember that?
Yeah. And now, we're still talking DSCR, put 25% down, you can get a 675, 6875, conventional, same thing.
Sub 7,
you can still do that, right? So everyone that's waiting is kind of looking at obviously the interview and the forum and saying, oh my gosh, like he's gonna do it. And I think that's gonna cause a lot more people that are extreme believers, right, in his following to stay where they're at further, and that might shoot themselves in the foot.
Yeah, well, it's really interesting because, again, if you just tie this together with facts, the story kind of falls apart. Now, what do I mean by that? Well, I think everybody out there believes that the way Trump's going to get lower rates is he's going to beat up Jerome Powell. Let's just assume that works. I don't think it will, but let's just play for a minute. And let's say Jerome Powell gives him another cut or two because I'm just doing a scenario. Mm-hmm. Hello, guys, did you not see what happened the last time we cut rates 100 basis points? Mortgages went up, right? They're not connected, right? if the Fed cuts short-term rates another 50 basis points, that does not translate to mortgage rates being cheaper. It could, but there is no guarantee. And I would just ask you to look at recent history. The Fed cut rates 50 basis points for their first cut. What was that? 4 months ago, 5 months ago? And rates went up 100 basis points since then. So, yeah, I just think there is a lot of connecting the dots that is not fact. It's like hopium. It's like he's going to come in, he's going to lower rates, he's going to beat up Jerome Powell, and mortgage rates are get cheaper. Well, recent history says that's not true, and you should really wake up to that.
Yeah, and I think the biggest thing, and this is kind of like, I guess, more of what I've been telling clients is the federal funds rate is not the mortgage rates, right? So
it's amazing we have to tell people that.
Yeah, like you're pointing out right now, right? The federal funds rate is lower, but interest rates are higher. Mortgage interest rates are higher. So, I'm really just encouraging clients and just anyone listening, like if you have a scenario where you're waiting, you're really, really, truly waiting for the mortgage rates to drop further because you believe that the cut of the federal funds rate will do that, and Trump's going to bully his way to make that happen. The chances of that happening, just, and I'm not talking political aside, right? Because I don't want to involve politics into the whole thing. I'm just talking as a neutral party, just talking about the numbers wise. The chances of federal funds rate being cut, which they're still planning to do this year, by the way, a little bit. They were still planning, just I think like 25, 50 bits, right?
Yep,
so they were still planning to do that, and rates are still higher. So they've already priced that in. And I think that there has to be a pull of a break in people's minds that the president of the United States, unfortunately, as much as we all wish for lower rates, right? We all want it. We all want more opportunities to buy real estate cheaper. But the reality is that there is that disconnect between the federal funds rate and the actual mortgage rates. And that's just what people have to understand. And I think really need to cut that bridge between the two, because they are unrelated at this point in time.
Oh yeah. Again, it's really interesting. Again, folks, none of this, marry the house, date the rate stuff. No betting on appreciation. No betting on this. We only do great deals that cash flow today. 30-year debt. If rates get better in a couple of years, great. Go refi and make more money. But don't do bad deals because you think there's some human's going to come in and make rates go lower. That's unrealistic, really, for anyone to think of. So just do great deals today. It takes time. It takes work. It takes follow-up. It takes this. It takes that. Talking about deals being done today, you're actually working on a couple of the deals, right? You've got this deal in Koreatown, and you've got another one you're working on. So let's talk about actually deals that you're doing today in today's market at today's rates.
Yeah. So obviously, as the channel knows, my heart is with Koreatown, just for my lifelong goal of owning a big piece of there. But we just actually, me and a few partners, just finished up closing on a 16-unit apartment in Koreatown, and we actually, despite, and I'm thankful for my other partners because they just kind of left it on my plate. I said, hey, when there was a dip in the rates a little bit, I said, hey, we need to lock now. We're locking now, and it doesn't matter what happens later on. We're locking now and just going, because that's kind of, I think, the mindset that people need to have is they have to just, the difference in what happens during the process of rates wise, unless it's a drastic drop, it doesn't really matter that much. You'd rather just put 100% secure the deal at something.
Know the numbers. Yeah,
exactly. Yeah. So we actively, right, are constantly trying to find more deals, and obviously the channel knows. But we closed on this 16 unit in Koreatown in a great location. We did a bankable loan, a bank loan, and we did it like 37% down to make the cash flow work because we didn't want to buy. We wanted to buy it on a debt coverage
Yeah.
of 130% at least
Oh,
on the
1.3.
NOI.
Okay.
Yeah, we went a little more than what's expected, and we the reason why we bought this one is because most of the rents, and this is the do the work right now, right, type mindset that I'm trying to tell people. Like I'm not just I don't just tell clients to do things that I wouldn't do, right?
Right.
So I'm looking at this scenario, we're looking at the NOI, the rents are very strong. They're like it was like 35,000 ish, right?
Mm.
And I think pro forma would have been if we turned like 6 of the units of the 16, we would be able to bump it up to like 40, and
Mm.
the NOI would end up being like 35 versus where it is right now, which is like 26-ish, 22-ish actually right now,
Mm.
which because the previous owner did a lot of work to it. But this was like an off market. This was off market, on market type deal.
Right.
Um, so we approached the seller, obviously did the work, negotiated the price. Unfortunately, it was a high bid situation where there was a lot of buyers, six
Mm.
other offers.
Oh, wow.
Yeah, it was, and this is why I think a lot of people that I talk to, they're like, we don't see a shortage of offers in the markets that they're in.
Lots of money out there.
Yeah. And I think right now, right, and this is what we've talked about in the past too, when everyone else is scared, right, the people with the money, the people with the Batman money come out of their caves and
Yeah.
start spending in these moments, right? I had another client that just bought like a $36 million facility in Florida. Like they say,
Wow.
they say what is it? The retail and of office space and all that is dead, but he just bought like a facility in Florida. They know things that we don't, right? As
Yeah.
common folk. And I think that so we did that, purchased that one because there was a again 130% debt coverage.
Right.
So it aligns exactly to what we're telling, and you preach
So,
to
so I got,
clients.
I got, I got a couple of questions for you. This,
Sure,
this is a
sure.
lot of fun to talk about. So, uh, one of the things you indicated earlier is you're in this deal with other partners, right?
Hmm.
And how many?
Two.
Two. So there's three of you. Uh, how, like, my vision of what Jonathan, right, what you want is, if we fast forward the clock 30 years, right, you're a player in Koreatown with, I don't know, you own like 3 or 4% of Koreatown, right?
Yeah.
So you're looking at this probably as a long-term hold. What about your other two partners? Right. That's one thing that's always been my bugaboo and why I have never done it is I just don't know that we have the same time frames, the same stuff going on. So, talk about working with partners that may have different timelines.
Yeah, they actually all have an aligned timeline. So before we even get in the deal, when I'm talking to people, and these are guys that I've done business with previously on a professional level, and I think those make the best partners. People that you've done work with before that are familiar with your work and you're familiar
Yeah.
with theirs. But they have a very aligned timeline that the only way that we'll sell this thing is if we turn all the units, and obviously the biggest difference between commercial and residential, as you know, just saying for the channel, is commercial goes off of the income cost approach when looking at
Mhm.
an appraisal, right? And residential goes off the sales comparable approach typically. So the income cost approach for this deal, I think we put under contract for 325. It
Hmm.
came back at 3.3, but and actually that was the sales comparable. But the income cost approach, because there's two different ones, was actually 3.45, I think, off the top of my head. So it
Okay.
came in higher than what we offered at. Um, and if we turned a few units and made the cap rate like 8% or 9%, it would have
Hmm.
probably multiplied the valuation by another million or so. Was the
Okay.
expectation that we had. So because of that, we before we even got in the deal, we had a serious discussion with, whoever I was talking to get in, and we said, hey, this is the plan. You have to be on board with it. That's what we're signing up for. We're literally
Right.
signing up for this specific plan for this specific property, right?
Hmm.
And that is the contract that we're essentially putting into place.
Hmm.
And if we don't hold it for at least, 5 to 10 to 20 years, there's no benefit there, right? If we can turn all the units, get it all out, the only reason we would get out is to 1031 into a bigger property.
Got it. Yeah.
Yeah.
Yeah. You got to go. So the other thing is that's 200K a door. What is 200K a door in 16? Are we talking studios, ones, twos? What's the mix?
So it's actually a pretty good, I would say good mix for that area. It's seven 1-1s and then 8 2-1s
Okay.
and one technically 1-1 plus a den, but it was kind of jerry rigged a little bit to be a 2-1.
Yeah, I got you.
Yeah.
Okay. All
Yeah.
right. So you just closed on this with your partners. You got any real big capital expenses coming out? Like, did you budget, 100 grand for, updating the outside painting, or did the old owner take care of all that?
Old owner took care of most of that. Most of it is cosmetic, actually. And
Okay.
actually, turning units unfortunately have to go through one eviction process that's currently already in process. And I think just figuring out how to improve the cash flow further, because
Yeah.
we put enough down to make the cash flow work. So
Right.
now it's like, how do we do more value add to make it better for the tenants that live there, but also increase the cash flow? So the same situation that all landlords go through and all property owners go through. That's kind of the jump that we took, and timing wise, that was, we literally closed with insurance prior to insurance stopping in
Mm.
California right before the fire. So
Wow.
um
Good timing.
yeah, active. We're very active, yeah, on that one.
I like it. I like it. Well, it also sounds like you're on the cusp of either putting into, or maybe you're in contract on a fourplex. Did I hear that as well?
Yeah, I'm non-contingent on it.
Non-contingent. Okay.
Yeah, because the appraisal came back good. I mean, we it was a bank owned property,
Oh, okay.
and it's a it's a bank owned that everyone on the channel is very familiar with. Actually,
Yeah.
I bought it from someone I'm very familiar with, and the the deal was, it's a 4 unit, 113 is what I have it under contract for. Just got the appraisal back at 126 with an ARV of 17.
Wow.
So, yeah. So, and here's what I recommend that clients do. And I tell clients to do this, but they just don't want to spend the extra money. But I tell them it's worth it every single time. I'm doing a bridge loan on this thing, right? So
Hmm.
if I go in on this thing, I'm doing an 18-month loan, interest only, with a $200,000 budget financed in, and I'm putting down, I think, like 18% to buy the property.
Okay.
So I'm leaving myself, I think, just based on what we talked about with, especially, the channel, like, from the ARV, you want to have at least a 30-40% margin on the
Yeah.
back end. Make sure that if you exit, you're going to be able to exit, right? Without
Yeah.
fail.
Worst
That's
case
kind of
scenario. Yeah.
exactly. So that's what I'm practicing. Obviously, practice what I'm preaching. And we're doing the bridge loan. I tell clients all the time, it's worth the money to do like a desktop appraisal or a drive-by appraisal before you even get into contract period. It's like a
Right.
few $100. Just do it because it'll give you more certainty on
Yeah.
how the appraisal will come out, just
Yeah.
purely based on the comps. And you have to know that you're getting into a good deal, right? And this was a highly competitive deal too, so I had to go in non-contingent, but it was like seven other offers that came in above mine. I only
Wow.
got it because I said I'm going bridge and non-contingent as
Mm.
is. So, but I had that confidence to do that because I hit up a few appraisers and I said, hey, I need some opinions. Can you two go out there and just literally do a drive-by and do the comps and do it? They came back to me and said the ARV will be between 1.6 to 1.7, and
Yeah.
as is fine. And I said, okay, then that's, again, part of doing the work, right? It's extra legwork you take prior to even knowing that you have the deal. And so we did that, made sure we had the value, and then 3 of the 4 units are vacant. So that's a big reason of why we end up taking the deal. And because 3 of 4 units are vacant, we obviously leaves a lot of opportunity. Can either have someone move into one of the units, live in it as their first time home buyer home, or we can obviously fill the units with at market rents and increase the cash flow to make it cash flow